The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
From TFNN, welcome to the November 7th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do it is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out, if we don't already know, what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com, inside the Tiger's Den. I love those instant messages. So reach out and let me know what it is that you want to take a look at. So let's go take a look at what these markets are doing on fabulous, it's really magnificent Monday. Of course, it's a fabulous day, though. And of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, Dow trading up 348 Rooney's trading at 18,236. S&P up 43 points at 2128. NASDAQ Composite up 117, trading out at 5163. Russell 2000 up 28 points at 1191. Gold is back 22 bucks. Silver's down 19 cents. Light sweet crude is up 30 pennies. Leading the charge here to the upside dollar-wise. Priceline up 52 bucks. Amazon is up 31. Google's up 21. Biogen is up 19. Regeneron is up 20 bucks. Chipotle is up 13 bucks. To the downside, let me see, who are the big losers out here? Alexion Pharmaceuticals, that's off about $5, nearly 4%. Coherus Biosciences down 460. HSN Inc. down 360. So we can take a look at Nico Eagles off a couple of bucks. We have some requests that have already come in by email, but I would love to hear from you. So the question is, hey, what are the markets doing? More so, where are they headed from here? What is it that we should be taking a look at? Let's try to answer really all of those questions. So, you know, right, you were the one that called this market last week. You were the one that said, hey, Steve, you ought to really go check out that cash spot VIX index and see where that's trading compared to all of the other futures contracts. So you were the one that you did a great job in identify, right? You were the one that actually was able to identify that. Let's go check in on it, see where we're trading right now. That's the bottom panel. Well, let's just forget about the panel. Let's just go ahead and blow it up, so to speak, out here. And the top line items, it's a cash VIX index. That's our spot VIX index. Right now, trading at 1884, down 16%. As we speak right now, you can see all of the futures contracts out here. So you can see November, December, January, all the way into July. Now, we have seen a little bit of a shift. It's about time. It's about space. It's about time to, I don't know what goes next. You can fill that in. But you can see we're trading at 1882. Finally, the VIX index is below the price level of the July 2017, June and July, even now May, even now April. Things are starting to line up. Still, it is trading above a couple of the futures contracts. So it looks to me like there is still more to go with regard to the VIX spot index to the downside out here. Now, the reason that we picked up on that, right, last week, Well, simply because you and I know how abnormal that is. And when abnormal shows up, we know that we start taking a look at other patterns out here that are completing that let us know that, look, bounce or bottom. Of course, one of those patterns that showed up, right? This was the other one that you identified, was that VIX one-day rate of change, right? We know that when there is a one-day rate of change, meaning yesterday's close compared to today's close, that is greater than 10%. And we got that reading on the trading day of November 3rd, right? So that was Thursday. You and I were noticing this spot VIX versus futures contract, that is abnormal. And abnormal says you better pay attention out here because you're going to see one of those violent rip your face off rallies out here, right? You just talk about overbought or oversold conditions out here that you just want to be careful. You know, number two, and there's like 3, 4, and 5, but we're just taking a look at number 2 here, is when we got that one-day rate of change, right, to greater than a plus 10% out there. The minus 10%, hey, that happens to be today. And I don't know where the VIX index is going to close today. What we want to pay attention to is where does the VIX index close at 4 p.m. And if it's somewhere right around here, if we're seeing a rate of change less than a minus 10%, I still got to get my vernacular on how to actually express that. But anything below minus 10% or less, now that does it for you out here. Then that says, and those happen to be, by the way, the green arrows on my screen out here. You see, the blue arrows are the ones that identify. You got to love that. That's coming from my cousin Vinny, I think. I don't know why. I just can't get rid of it. And so if we take a look at those dates out here, that is when it's an exhaustion move inside the S&P 500. One of two things happens. Not always, right? Not always. But like you're in the 90 percentile. If you could have a trading system or set of tools that work 90% of the time or even 86% of the time, would you want those? I give that stuff to you here live, certainly in the newsletter, right? And so that's what this does. That's what these green arrows, these blue arrows show you. Just go do the work yourself. Don't trust me. Always do the work yourself. However, you can trust me. I have your back, and that is a beautiful thing. Now, with regard to having your back out here, today, if the VIX closed right here, right now, with a less than, right, lower than, minus 10% or lower out here, that can be, as you can see by the blue arrows here, that can be the green arrows, that can be an initiation move. It can be an initiation move. And if you take a look at the S&P 500, I'm glad you asked me to do that. If we go take a look at it, initiating off of what? Well, how about the A to B equals CD to the downside out here? If we take a look at that pattern, let's go see if we can draw this in here on the S&P 500. There you can see the 1 to 1.272, A to B equals CD to the downside. Yes, AG thought there was an inverted hammer in the SPY. It wasn't the SPY, it was in the S&P 500. Maybe that is what AG meant to say out there, which some people, and look, it is classified as a bullish Japanese candlestick. But Stevie doesn't like to use it. I just believe that it is a bullish reversal. It is a bullish candle. It is not a reversal candle. Today's candle, whole different story. Nonetheless, yes, I did go along the S&P 500 on Thursday out there because of those other elements that you and I were taking a look at. Now, what we can see is we actually have a confirmed Gartley buy pattern. Gartley buy pattern. We don't want to ignore that any more than we wanted to. We won't ignore abnormal, right? When you see abnormal show up in the VIX index out there, it's time to take action. Action. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. As Jay was pointing out inside the Tiger's Den, the good market breadth today inside the New York Stock Exchange. And so one of the things that you and I are going to pay attention to over the course of the next week out here with regard to whether or not today is an initiation move, and a number of things out here, is we're certainly going to continue to watch the New York Stock Exchange market breadth. And the reason that you and I are going to watch this more now than we typically look at it is because when we take a look at the negative oversold market breadth out here, the bottom portion of my screen is what we're really focused on. That happens to be Marty Zweig's indicator here, the Zweig thrust indicator. And what occurs out here, the blue horizontal lines that you see on my screen out here, believe it or not, the blue line is at the .40 level. When price gets down below that area, that's really telling us about a significant oversold reading bounce coming as soon as it turns up, which it did on Friday, and got back above the blue line out there. And we're seeing nice thrust. Now, this signal out here, what we look for is whether or not it can get above the top blue line out here, and that happens to be the .618 level. Needs to do it within a 10-day period of time, and that count started, this is day 3 that we're in. So we would need to see within the next 7 days continued market breadth. Doesn't have to be in a row, but does help to be in a row out there and get back above that top blue line out here. Often, this doesn't occur. If it does occur, boy, it tells us a lot about the Santa Claus rally that would be unfolding. And yes, even though it is November 14th, that is on my trigger schedule, there were just too many other patterns that were forming that we just simply could not ignore. Now, I can't control the markets any more than you can. All we can do is do what we can control, which is the entry, exits, stops, things of that that sort out here. But we want to keep one of our eyes on the market breadth. More importantly, inside of the New York Stock Exchange. We want to use that really more so than taking a look at the advanced decline oscillator, which if we look at that right now for the New York Stock Exchange, that is the left-hand panel. Right next to that is the NASDAQ Composite. Right next to that is the Dow, and then we've got the S&P on the very right-hand side. You can see the blue lines in those first three panels. They're still below the green horizontal zero line. What that says to you, what that is communicating to us, is that it is actually still the sellers that are in control of this market. Yeah, so conflicting patterns out here, the answer is yes. Now, this tool has not been accurately calling who's really in control of the market. So whereas I would maybe normally use it more often to say to you, to express to you what this is telling us, I'm saying it's worth something, but not a hill of beans out here. Where did the hill of beans thing come from out there? Maybe I just make some of this stuff up, but it is worth a hill of beans, but it's not anything that you or I are going to hang our hats on. Now, we start getting above zero, staying above zero, it's something to pay attention to. Hey, you know as well as I do that markets don't end on wide-ranging bars, so and we'll see whether or not Election Day happens to suggest otherwise out here. To suggest otherwise, what you and I have to do is start looking at intraday patterns, right? And in looking at intraday patterns, you and I first start off with looking at least 30-minute charts out here, right? We can go to the 10-minute charts and just get, whacked around all the time out here. But you don't want me to take a look at that. I don't believe that you do. If you do, you just need to post it in the den or call in or something along those lines. So the number that you and I, or numbers that you and I are going to be looking at, certainly during the overnight trading hours out here, it's going to be 21.20 and a quarter inside the ES Mini. As long as the ES Mini is trading above 21.25 out here, 2120.25, that's one tick, you can anticipate that the markets are going to move higher. You close below that level, I'm more inclined to believe that the advanced decline oscillator reading that perhaps has it right out there, and we would be looking for some type of retracement. Now, how does that assist you? It assists you by knowing between the time that I'm off the air and 4 o'clock what to be looking for, because if you were to start seeing the ES Mini move below that, you're an intraday trader out there, you would be looking at spots to maybe take a short, not maybe, but take a little short-term short trade out here. You'd want to be paying attention to retracement levels, market profiles, things along those lines out here. The NASDAQ is the stinker, right? The NASDAQ is the one that really, for the most part today, hasn't given us the clear all engines go out here in the market. You might say, what the heck are you talking about, Steve-O? What I'm talking about is Stevie's red line. You know, this is the red line that you pay attention to. And if we take a look at that red line, this is the concerning part about myself being long and subscribers being long out here, is that I really want to see the NASDAQ have this nice thrust coming into the close out here and get above that red line, because that red line is pièce de résistance, and that is priced at 4774.76 if we're going to be exact about it. You and I don't use it to be exact. We kind of use it as a range out here. If price can break above that, then it'll join really most, I haven't looked at all the indices out here, but most of the indices being above that oscillator unchanged line. What does that mean? That means the price oscillator will have ticked up. When a price oscillator ticks up and it's above zero, it can't get any more bullish out there. Can't get any more bullish. Grammar teacher is going to whack me out here. However, inside the NQ out here, you can see it's actually below the zero line. So that just says, hey, could just be more of a counter trend rally / retracement that is underway. So there's a number of things that you and I have to keep our eyes on. We always have to keep our eyes, because our role is to always interpret what the market is communicating to you and I. It's just a handful of things that we need to pay attention to. But if we don't pay attention to those handful of things, the recipe's going to get all messed up. And how would you like to have somebody cooking you just extraordinary chocolate chips and forget the chocolate chips. It just wouldn't be the same. Of course, or maybe they forget the sugar out there. So the chocolate chips and the sugar in our case out here is really paying attention to the VIX index, one-day rates of change, some other tools out there that I share with you from time to time. Take a look at these red lines, these horizontal red lines inside these 30-minute charts here for the equity futures contracts and some of the things that we have already talked about. So at this stage, here's what we know. We know that as of 1:25 in the afternoon, we have an initiation move that is inside of the markets. That says we should see higher prices even intraday tomorrow. Tomorrow night, I don't know. We'll just have to see where the market is at during the show out here. That is what's likely to occur. We also know that we have Gartley buy patterns almost all over the place. Let's take a look at, as an example. Give me a moment here. Where's the example? Let's go take a look at, somebody wants to, I'm sure, take a look at the IWM. Let's go take a look at the IWM as an example. What do we have out here? We had a nice 1 to 1.272, A to B equals CD to the downside. Nice bullish reversal signal as we speak today. That is your confirmed Gartley buy pattern. We talked about how the Russell 2000 was actually the leader on Friday, leading the NDX, leading the NASDAQ Composite, leading the S&P, leading the Dow. When the leader of the pack is the Russell 2000, that is bullish. Just like when it is leading to the downside, that is bearish. I'm not talking long term. I'm saying, at the moment, being in the moment. IWM, it is going to head to 119.09. If it breaks above that, 119.58. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Get to some of the emails that have come in. We'll segregate. Many of these are asking about gold. So for each of you that have sent emails, thanks for doing that. The questions stem from where do I think support is on gold in the short term to is now a good time to get in on Nugget and GDX. So let's go try to answer those questions out there. And let's see what the best place to start with, I think, is so what's going on with gold? Let's take a look at gold. When I say what's going on with it, it's pulling back, obviously. It's back $24 right now, trading at $12.80. So we need to take a look at a couple of different charts out here. In fact, one of the charts we should look at is probably the GLD. Let's use the GLD and get a framework with regard to the volume that we are seeing today. So we've got a pullback today with about 4.6 million shares so far, made a high with 16 million shares back on November 2nd, so that's 15 versus 4.6. That says we've got a light volume pullback. We saw that in the GLD. What it's trading into is where we saw a gap to the upside, a move to the upside with 13.3 million shares. So what we can assess as of 1:30 with 4 hours of trading in here as the pullback inside of gold is with light volume. So that's the first thing. That's the first element. What if it was with volume? You know, it's going to influence, as it should, our decision making with regard to what it is that we're looking at. Now, if we go take a look at the physical gold contract out here, we're going to see that price is trading below. It's a brand new, but I do mean brand spanking new TAS market profile that from a daily perspective that showed up today. Now, this has a bullish bias to it on two fronts. One, the profile appears at a higher level than the previous profile. Two, the point of control, the little very dashed lines out here, are closer to the bottom of the box. So if we were going to make our determination, it's now where is gold going to find support, short term, long term, any kind of term, you would say could be the 1266 to 1276 level. Either the bottom of that box or that point of control. If you were going to, now the problem is that the gold contract's going to be trading all night long and trying to get in on the GDX, NUGT, and so forth. Those trades, you're not going to be able to get in on that. For the most part, depends what exchanges, you might be trading on. But as we take a look at where things are trading inside of gold on a daily basis right now, nice light volume pullback, this may make its way down to that 1266. That would be the place that you would go ahead, set your hook, and that would be your target. Now, that's what the daily chart shows to you and I. We've got to really go over and take a look at some intraday charts out here. And the one that we're going to look at is going to be the 30-minute chart here for the gold contract. Now, in this case here, I've got like just a few minute delay, so the price is going to be exact. We're trading at 1280.30 live. We're trading on my chart here at 1281. It's close enough, right? You can see that's not going to impact us too much, with the exception of we do have price trading on Stevie's 30-minute red line out here. Now, here's what you and I know with regard to gold. We know the daily is pulling back with light volume. We now also know that on the 30-minute chart out here, price has been pushing down with less relative energy, right? So it's got that pattern. And we also know that in the last hour and a half out here, we have a nice reversal signal. We have a nice little morning star. That's a 12:30. That is the 12, the 12:30, and the 1 p.m. candle session. What you'd like to see, though, to confirm this pattern is price moving higher, not pulling back here. It always makes these reversal signals suspect when we can't get follow through. And then possibly between now and, trading below my red line out here is not good. Now, that doesn't mean that now is not the time to take action, except that now is not the time to take action. What do I mean by that? Hey, we might see gold actually push a little bit lower and still do with less relative energy out here. You still need to see the cavalry arrive. So to answer your question, what I can do is I can provide you with information so that you can make that trade. Here's the two things that you know. With regard to, by the way, Nugget, GDX, all of those out here, it's going to, for the most part, it's going to track directionally the way that gold or silver. So we really want to come here and try to get our head wrapped around it. So I'm kind of, rubbing my temples of my head out here. I want to try to wrap it around my temples, my Shirley temples out here. Say, hey, are you giving me a reversal signal? I'm going to go with the Lee Corso message, which says not so fast, not just yet out there. So still be careful. Pay attention to those daily profiles before you would go ahead and pull the trigger. And that's what I would be looking at exclusively versus take a look at GDX, Nugget, and so forth. But if we take a look at the GDX, which we can do, it's possible that this thing actually did hit support, or very close to it. You see, support would be the bottom of the box out there, $23.68. It didn't get right down to it. It got down to $23.75. That's close enough for me. And so price may have hit support in the mining equities out here. I don't have, and so you'd probably go search, things like the top 10. So you'd be looking at Barrick Gold, ABX as an example, not ABXZ, because that's not going to pop anything up your screen or mine. In the case of Barrick, you got 9 point. Now somebody might say, hey, that looks like a little island top out here, and I'd say you're right, Mon. 9.9 million shares to the downside. But this thing was making eyes with 25 million shares. I'm going to not ignore that little islandish top out here, but maybe Barrick Gold hits 1673. Maybe that's your time. Look for a pattern inside the 30-minute gold chart. Look for Barrick to get down maybe to 1673, and then fire away at those Nugget and gold trades out there. So hopefully that answers all of your question. Rose writes in, Sylvia writes in and asks about SRS. Either direction, SRS, puts, calls, whatever. Where is SRS headed to? Now, SRS is the ProShares Ultra Real Estate. So that means this is the long position. It's right now trading out at, it's a short, what is this? What is this? Ultra would be the short position, right? Yeah, Ultra would be the short position. What's the long position for the real estate? Does anybody in the den know? I don't remember off the top of my head out here. Nonetheless, so we can take a look at the inverted relationship out here. If we look at and let's just do that, SRS. Let me go see out here if there are any other patterns that show up on my screen, my other screen. 3920 would be number. So this says that SRS is likely going to pull back. I say that because it's trading below my oscillator unchanged line out here, and which is priced out right now at about the 3920 level. We are trading at 3907. So this would suggest to me that SRS is going to pull back to about 3801. But at 3801, that could be support. Now, volume today is 174,000 shares so far. Where is that pulling back into? 123, 141. So there's some pretty good volume to this, to the downside. So in the case of SRS, we would take a look at, no, I don't think SRS has anything to do with the UVXY. Maybe you're just asking me to go take a look at that. But if we take a look at the SRS, with the volume today, it would say to me that this is going to go ahead and break the TAS market profile bottom of its box out there at 3801. And more likely the target becomes this swing point from October 24th that has 96,000 shares. So that is my initial take with regard to where SRS is headed to. Another question is if I would take a look at USO. And if we take a look at USO, that is the ETF for oil and light sweet crude, black gold, Texas tea. And the question is now the time to get long the USO? So when we get back from this break here, let's go take a look at that. I'll try to figure out what the questions are in the den. Take a look at that as well. And we'll be back in just a few. Dow's up 352, S&P's up 43.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 347. S&P is up 43. John in the Tiger's Den, Mr. Z, looks like asking a question about the COT report and bearish the dollar. Absolutely. The U.S. dollar index, I mentioned this last week, was that the commercial traders had gotten to the highest level of short position inside the U.S. dollar index. Normally, I go ahead and take a look at each of the individual currencies, even those outside of the basket of the U.S. dollar index, which seems to have more of a better feel. But I do pay attention to also the U.S. dollar index itself. And so the larger bet by commercial traders is that the U.S. dollar index is going to move back. Now, that's up 73 pennies today. It's had a big move to the upside out here. But I can just tell you that is, I'm seeing exactly, I believe, what you are seeing there, Z. I'm also seeing that on the 10-year Treasury note that they're in a net long position. So I keep looking at the 10-year and the 30-year Treasury note looking for a pattern to complete, and it just isn't out there just yet, or I haven't seen it just yet. So that's another possible trade. They're also, by the way, they're at a net short position with regard to base metal like copper. If that helps anybody out there. Again, you want to trade the patterns, but it is nice to know what the big money interest is, how they're positioned themselves out here. It doesn't tell us when, and it's a whole different trade that they've got, but it is nice to understand what it is that they've got going. So what does that mean? That means, to me, And I don't care what the Fed does. It's really, how does the market respond? How are these big money guys position themselves? What are the patterns doing out there? And it's very easy to make the case that gold is just going to make its next leg up or next legs up in the marketplace. And that could easily be courtesy of the U.S. dollar index. But we know that gold has been moving higher in all currencies out there, although I haven't checked it today. So I don't know exactly what it's doing in yen, pounds, euros. You can do that. You can go take a look at that. Okay, so that takes care of that. Had a couple. USO. So the question was on light sweet crude. Is now the time to take a long position? I'm going to go back to the US. Well, here's the light sweet crude contract. Then we'll kind of do this so that you can figure this out at home as well. Here's what we know. 100% move of a move. That means that light sweet crude came back to test the September 20th swing point. Tested low of that, rejected it. Haven't seen any kind of bullish reversal signal yet, so we don't have any kind of confirming signal that that is the bottom. I'm going to go ahead. We're going to do two things. Try to do them all at the same time out here. I'm going to switch over to the 30-minute chart on another screen, but here we're going to go take a look at the USO. This way we can go take a look at, hey, what was it doing volume-wise, meaning comparing the September 20th swing point, and then we'll have some market profiles for you to take a look at. September 20th swing point, 44 million shares. That was tested with 55 million shares. So what does that tell us? You're testing a swing point with volume. Even if you reject it, which it did. Now, we're really looking at light sweet crude, just kind of gauging our sentiment with regard to volume tests of the USO out here, and says when you test a swing point with volume, even if you reject it, you're going to get back down there and test it, in essence, which is what is occurring today. Now, with regard to the USO, it has formed a brand new market profile today. And this one is actually kind of neutral, so that doesn't help you a lot. What do I mean neutral? Point of control pretty much smack dab in the center of that box out there, so that's not necessarily helping us. What you'd like to see is some type of bullish reversal signal. So then that takes us over into the 30-minute time frame chart out here. So if we go to the 30-minute chart for light sweet crude, the pattern that shows up on our screen where there is potential of a bottom is a nice TD setup 9 count. Now that's on the 30-minute time frame chart. In order for this to go ahead and give you that bullish reversal signal, you need to see light sweet crude close above 44.45. That is my oscillator unchanged line. As long as price stays below that, says that it can continue moving lower. So on the 30-minute chart, no dice yet. Whatever no dice yet means, it means that we do not have any type of confirmation that now is the time to take the trade. That doesn't mean we're not going to see it. I just gave you the parameters that really you should be looking at in order to be able to go ahead and execute a long trade inside of USO. Question that came up is if we take a look at General Electric, the General out here. And that's actually a very timely question because we know that General Electric and the Dow, when there's a divergence, it's usually GE that is the one that is telling us the story out here. So we do have GE trading to the upside today. Volume-wise, 18 million shares going into the swing that has 43 million shares. It has tested and it has rejected. It doesn't mean that the swing actually, that's the swing point out here. Short-term swing point. So you got light volume. That's to be expected, anticipated out here. There's no way that we've seen nice market breadth, nice bounce at this stage here, and that's what I've got to call it at this stage, bounce. But it's as bounces go, it's got a real glimmer of hope out there, and more than a glimmer. You get that less than minus 10%. You get the market breadth that we had. You get a wide-ranging bar. Maybe the market moves a bit sideways tomorrow. How do you trade it around this election thing? You've got to do what makes sense for your risk tolerance. That's the easy thing to do. It's also, it's also a fight, so to speak, that you don't have to participate in. Here's the real simple thing. There is the potential, very big potential, that there's going to be one huge Santa Claus rally, depending on who the candidate is that wins here. So Tuesday night, Wednesday morning, hopefully we know what that deal is. And so even if you miss it by a few bucks or so, it could be a huge Santa Claus rally. So being able to sit out if you are already on the sidelines, it's not a big deal to do that and just wait for some confirming information out here. With regard to GE, I think the question is, where to get in. out here. Same real kind of answer, right? You're moving into a swing point with light volume. So far, it's rejected it. The answer is probably you'd want to put a buy in at 28.80, 28.90, or 28.63. You don't want to see it close below 28.63 out there. So that is on General Electric. The General. Last one was AFSI. There was also another question, if what are the best stocks I think the best stocks if Trump wins and the market drops. And John, I don't know the answer to that question. I don't know which individual stocks would be the best to purchase if Trump wins and the market drops out there. And I just don't have an answer for that. So that's one question I won't be able to answer because maybe somebody in the den has an idea, and I'd be happy to share that. With regard to AmTrust Financial, right now it's trading out at $25.23 out here. And if I look for any patterns out here, let me just put that in AFSI, see what that is doing on my other system. Has it made its top? If anything, I'm not seeing anything really good here. What I do see is that this equity, right, it's below market profile, so we can turn those off. They're not really assisting us. There's no support that it could hit. It's pulling back to where this thing had broken out with volume of about 1.1 million shares, 1.4 million shares. You are pulling back with lighter volume, but the real buy on this would then be at 24.53 to 24.35 AFSI. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. The screen that we're looking at right now happens to be the screen for the Dow. The red horizontal lines that you see are the horizontal trading ranges. The solid lines, let me go ahead and do this. Let me turn off the little dash lines, make it a little bit easier for you to see here. Not that you can't see this, but if I turn those off, there we go. Now what we're really looking at here are the horizontal trading ranges, and these are important to pay attention to. These are the horizontal price levels that typically contain price from a support and from a resistance level out here. Now, this data is going back the last quarter of a century, basically, and that's where we're taking this information from, and it works really, really well. There's a lot of people talking about the 18,000 level inside of the Dow, and quite frankly, they should. There's people with conspiracy theories and this and that and the other thing. Folks, we have seen, and that happens to be a horizontal trading range. That's really why it's so important. All the other stuff is just noise. It's just noise, and don't let it bust your head apart or anything out here. Here's what we know. When the Dow got up into the 18,000 area, that happened to be, this is a monthly chart, the month of December 2014. Nearly 2 years ago. Price continued to try to bust through it, couldn't bust through it, can't bust them up. What does Tom like to say? Obi-Wan Kenobi, he says, you can't bust them up, you go try to bust them down. That's exactly what happened back in August of 2015. What was August 2015? Was that the Ebola scare? Which one was that? Was that the, I don't remember which one it was that moved it to the downside out here. Then we had the January scare, right? The China scare, the China conundrum. I think that might have been January. Who knows what it was in January 2016? Couldn't bust them down, tries to bust them up back in November 2015, can't bust them up, tries to bust them down in January 2016, can't bust them down, tries to bust them up. Well, guess what? It did bust them up. It got through it in July of 2016. And when you get above a level of resistance, there's no question, should be no question in anybody's mind out there, that 18,000 is a critical level, not because of what most people are talking about up there. It's because it is a significant level of resistance that thus far has finally given way and has busted through. And why is that important? Because as long as the Dow closes above 18,000 on a monthly basis, I don't care what it does, intra-month, as long as it closes above that on a monthly basis, your price target is 19,899. Yeah, you can say it. I can say it. We're going to call it 20,000. That is the price target for the Dow. You might say, I don't, you can find all kinds of ways to say it won't do it. And you might be right, but let's not ignore, just like with regard to the, what the VIX index was, the Cash Spot index was doing with regard to all of its futures contracts out there. Just let's not ignore such important information that is available to you and I. The question with regard to, should you get in on a short trade in the VIX? I think that the better time to have gotten in was on Thursday, Friday versus today. It looks like the VIX is going to continue to trade lower. That should make the S&P move sideways to higher. Looks like the VIX is going to head to 1736. But your better information was really coming when we talked about it on Thursday and Friday out here versus where we're at today. So if you're not in that trade, I wouldn't really get in on that trade right now. I just think you're too close to midstream out here. You'd have to look for a shorter term pattern, and I've only got about 15 seconds, so we're not going to be able to do that. So folks, stay tuned. Great lineup as always on Mondays. Our favorite polar bear, David White. He's going to be up next. Tom O'Brien show from 3 to 5, and a nice day. We'll see if this lasts. Going, pretty common for a day like today to see the market. Let's call it the S&P 500 close at its high. So don't be looking to short today. Odds do not favor that as being a good trade. Tonight's a different story. Take care, folks. Have a great Monday. We'll see you on a terrific Tuesday. And make sure you go out and vote. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.